Welcome to the Capital Discussions Market Analysis. I'm here with Dave Stewart and Jerry First today. Before we get started, quick disclaimer: the Capital Discussion is not a broker-dealer or an investment advisor. This presentation is for educational purposes only. We don't know your situation and have no way of knowing what level of risk is appropriate for you. We're not making any specific trade recommendations, and the risk of loss in trading options can be substantial, so please be aware of all of your risks prior to placing any trades. Hypothetical computer-simulated trades are believed to be accurately represented. However, actual profit or loss vary due to market factors such as liquidity, slippage, and commissions. So with that disclaimer out of the way, Jerry, would you like the ball?
Okay, I'll go ahead and I'll take it. And while I'm taking a screen, this is the first time really talking and working here with Dave. I don't know what type of information or charts or words of wisdom you may be. What are you going to be bringing up?
Well, I didn't. If you want to give me the ball first, I've just show one trade that happened right after the close.
Okay.
But I
start with that. Yeah, Jerry, I didn't know if you were coming, so I asked Dave to join me, so I wouldn't be by myself. But Dave's a meeting member and experienced trader, and always good to talk to.
Yeah, sure. Good. Yeah, go ahead.
I'll fill you in sort of as we go along, Jerry. But I do sort of everything. But I happen to be on my Apple side right now. So, can you see my screen by any chance?
Not yet. Click the share button.
All right, wait 1 second. Let me go back. Share, right, okay. I'm not usually on this side. It says share my desktop. I guess that's the same thing?
Yep, there you go. It's starting to load.
Okay. Okay, it's up. So I do a lot of options trading, Jerry, complex positions that I've developed, and we're going to probably do something at one of the featured meetings soon. But I didn't really prepare anything, just helping out Tom here. But I just thought this was kind of interesting. Right at the close, can you see down at 1606?
I don't see it yet. Do you, Jerry?
No, I don't. I've got a gray screen right now. It looks like you're trying to share, but it's not coming up.
Maybe give it a minute or so. Are you on a big screen, Dave?
No, it's just the laptop. Well, I'll just describe it, because I think in general, what I usually do is I log in on my Windows parallel side if I'm doing stuff with Tom and Jim. I happen to log in on the Apple side. So if it doesn't come up, I'll just tell you what it is, and then Jerry can take over the screen. But just you know, it's not super important, but just interesting. Right at 1606, they came in above the market and bought just under 6 million shares of SPY, and it's about $3 billion worth above the market. And I guess you guys can't see the live vol time and sales, but I just went in there, instead of options, clicked underlying trades, trade size greater than 10,000. And yeah, I just thought that was kind of interesting that just under 6 million shares above the market at 210. The after hours quote is 209.90, 209.91. And I just thought that was interesting. Somebody was confident in the market.
And that was today.
Yeah, exactly. It's just at 6 minutes after the close, because SPY you can trade, until 4:15 Eastern time.
Right.
Just like you can the SPX or the RUT options, and I do a fair amount of trading at that times, because I find you sometimes get true pricing at least if you're selling things. You don't want to be desperate, obviously, at 10 after. But anyway, I guess you can't see. I'll just do stop sharing. The live vol screen never came up for you guys, right?
Yeah, it was weird. I
just had
I screen back to Jerry, and it looks like you're not even on the panel. So for some reason, WebEx doesn't think you're signed in or something.
Weird, because it says you are sharing your desktop. But I'm just going to go ahead and click stop sharing then. I just was pointing out that little trade I thought was a little bit interesting. Doesn't mean a heck of a lot, but so I'm trying to do stop sharing, and yeah, it doesn't work well on the Apple side. So I'll just go back to the WebEx and trying to just stop what I'm doing. Sort of stuck.
That's okay. I'm pushing my screen now, so that's all right.
Yes.
Can you
Jerry?
see that?
I can see Jerry's
Yeah.
screen. Can you, Dave?
I seem to be sort of frozen here.
So here's, just to go ahead and illustrate what Dave is talking about, I pulled up SPY just on a price and volume chart. And yeah, huge volume spike right there, just like he says. At 4 o'clock, you had a huge volume spike down. Notice the market went ahead and for the last 20 minutes, really, we came down from 210.63 right down to 209.86 or so.
Yes, there was shares to sell. There was market on closed sell orders.
Sure. Get the order in balance, and then right there at 6 minutes after, it looks like they rebalanced it again. But look at that huge spike there. Is that the one you're set right at 416?
I'm showing it at 1606.
Yeah, 1606, I've got the volume spike, but then I'm looking at 1616. There was a huge spike all the way right back up at 210. You know what that is? To me, that's somebody fixing a trade. There was almost no volume, but there was a little minuscule tick where somebody got, I guess a trade was broken or something back
No,
up
that's
here.
probably that trade because LiveVol says Form T, 160608. It was an arranged trade or something, and then they threw it in there. But it looks like BlackRock or somebody said, market on sell. Well, I'm going to come in and buy, $4 billion worth of SPY. Thank you very much.
Exactly. So that does kind of, lead into something I was going to talk about, that we had a little mini flash crash in the dollar index last week. I think it
missed that part of the topic, but I'm going to have to force quit and log back in, Tom. So I'll be back in a minute.
Okay.
Yeah, take a look at this. In fact, I'll wait for Dave to come back in. But all right, so hey, you had to log out and back in. Take a look at this. Look at this this is a 1 minute, this is a 5 minute chart of the dollar index, and this is back on the day of the Fed announcement. And look at that flash crash all the way down and then right back up. Truly amazing what passes for what should be a price discovery market. And let's see, Steven's saying, it's hard for me to interpret this actionable info with all of the algo bullshit that goes on these days. Exactly. And I don't know, I wish there was a timestamp. Is there we can get a timestamp on this WebEx comments? Because I hate to be commenting on something that was written 5-10 minutes ago.
I think so, but Stephen was talking about that SPY trade.
Yeah, and this is again another example of what passes for these markets that are truly being manipulated. We have to realize that we're playing in somebody else's cement box, and sometimes it's pretty liquid, and sometimes it's settling, and sometimes we're just plain stuck with what we get. And want to bring your attention to my 3x3 grid for those of you who haven't tuned in before. Jerry first. It's my 3x3 global grid where I'm looking at the euro dollar, the pound dollar, and the dollar yen on the top row, the dollar index, oil, and gold in the center row. and on the bottom we got the S&P, the Dow, and the NASDAQ. And the story, these are all right here. You can see my tabs. I changed that to a 5-minute chart. Let me change that back to 30 minutes. The correlations are extremely, well correlated, almost everything, and it looks like oil at one point was getting uncorrelated. Now look at the correlation with oil over here in the center and gold on a 30-minute chart. Those correlations seem to be coming in play. Look at the markets, NASDAQ, the S&P, and here you can see the inverse of the dollar index versus the euro. The pound seems to have somewhat of a mixed correlation. And of course, as option traders, we can trade with some of the ETFs, the FXE, FXB, FXC, FXY, FXI. If we wanted to take, I like longer term positions, used to be heavily involved in the currencies, and these are all daily charts, and these chart patterns that show up on the currencies are just as valid, whether it's a 5-minute chart or a monthly chart. But the idea is that if we're going to trade options, and we're looking at the global markets because we are interconnected, we can take advantage of potential gaps. So I'm waiting usually for a trend channel to either break or bounce. I'm looking for potentially sideways consolidation like this to go ahead and break different patterns. And of course, I've got my regular charts, and I've used eSignal, I've used TradeStation. When I teach, freestockcharts.com actually has a very, very robust version of the paid version. So a lot of people like to take the free charts, such as you'll get from Thinkorswim or whichever platform you may get. But it's like any other tool. You need to be able to quickly get the information that you want and be able to, like for example, if I wanted to draw, let's say, let's take a look at gold, GLD, okay? So here's a 1-minute chart, beautiful trend channel, but let's look at 30 minutes. If I wanted to go ahead and draw a trend channel, notice with Thinkorswim, I've got to go ahead and I've got to click, and I got to click on this. I got to hope that it starts to not draw. I have to go ahead and redo this. It's time is money, and frustration can cost me money, and so that's why when I'm trying to draw, let's say Fibonacci's, if I'm going to draw from, let's say, this bottom to this top, it seems to me that I can just do it a lot faster and a lot more accurately when I'm using a program such as this, where I can quickly draw trend channels. I can quickly draw Fibonacci's. And in the case of this program here for drawing tools, I'm also able to show my charts, show my lines. See that? This is a weekly chart over here on the right and a daily chart over here. And I can go ahead and hide and play hide and seek with lines from different time frames, and even take a look. If I hit my crosshair on the weekly chart, notice that shows up on my other two charts. Notice how my lines are moving. So I'm able to quickly go ahead and take a look and see, what's really happening on each individual bar on multiple time frames. And that's how I derive some of my technicals. Then when I dive deep into options, my preferred decision support software is OptionView at this point in time. And then I'll drill down.
Jerry, I just wanted to say I finally got back on and missed a little bit about what you said about the U.S. dollar, but I do know they had that spike down and then I guess what I would call a half-back retracement, but I am still long some UUP puts and also that TC2000, that's just great software, but yet I still don't have it. I just, but I do like that TC2000 you were just showing.
Yeah,
Nice software.
and there's lots of different tools out there, so it's not to say that one tool fits everything. As long as you're able to go ahead and everybody's got their own edge. Some people don't even like technicals at all, mostly because they don't understand it or don't want to take the time to learn it. But as long as you can go ahead and work your charts, that's great. I've found that like this program right here, here's the dollar index. This is what I was showing Dave, this is a flash crash on the dollar index the day of the Fed announcement. And notice how this was, I'll change that to a 10-minute chart. And notice how the dollar index was cruising around up here, and then all of a sudden a little spike up and then slammed all the way down right there at 4 o'clock. So we're getting...
I bought the UUP puts just in the beginning part of that scan. Like I told Jim last week, even a blind squirrel finds an acorn once in a while.
I don't know about an acorn. Those are nuggets. If you can catch a flash crash in your favor, you got to grab it. You got to grab it, and that's the thing. How do you know when you've hit the bottom? Because even within this flash crash, you've got these zigs and zags. It came down, zigged up, zigged down, zigged up, zigged down. And what would happen if we were to go ahead and put a fib? I didn't put no fibs on here yet, so let's try. Let's see what a fib line would show. So if I go from the extreme top to the extreme bottom, let's see if it's going to catch some highs and lows. So you can see from here at the extreme top to the extreme bottom, we've got a 23.6, which accurately found the congestion point right here. Notice that price came down and it zigged and zagged right there. Notice that the 38.2 pretty much accurately identified this zone where price came down, went up, went down, went up. It was vibrating, so to speak, right above and below the 38.2. The 50% retracement, that was one place where it just about came down, almost hit it, went back up, came back down, basically stopped. This is on a 10-minute chart.
10 minutes, right.
Yeah, if I was to bring that down to a 5-minute, let's see, getting a little echo there. Huh? And so here you can see that on the 5-minute, we came down, went up, and it was also kind of stuck around this area. And the 61.8 accurately went ahead and called this support level. And the 78.6 picked those tops off pretty nicely right here. So a lot of people will go ahead and say Fibonacci's my butt. You draw enough lines on a chart, it's going to hit something. The whole idea is you've got a price target. Because if you're talking about every once in a while a squirrel gets an acorn, you got to figure out, do you have one acorn or do you have some, do you have like a Swiss cheese dinner? So I don't know if squirrels like Swiss cheese. I would assume they're rodents, so most rodents like cheese.
I don't think squirrels like...
What program are you using to hit running at the top.
I'm sorry, say again?
There was a question of what software you had the quotes running at the top.
Oh, that's the TC2000, this program right here? Yeah, TC2000, and you can actually go out and pull up, let's see what happens if I go to freestockcharts.com. Run the free version. You've got to install Silverlight on here. And the beautiful thing about this software is it will save your lines, it will save your analysis, and you can very quickly and easily, so notice you've got that ticker running across the top of the screen. You can go ahead and you can put multiple charts side by side. You can add most of your common indicators. And if you wanted to send a chart to somebody, you can go up to Tools and create a hyperlink. It creates a hyperlink, and if I was to email that to somebody, it would open up my chart exactly the way you see it. So when I'm training people, I can create a side-by-side layout, and they'll say, you know, how do I get it all set up the way you have it? I'll just send them one chart, and they've got it right there. No charge. No charge.
And I was just going to say what was interesting. I bought the UUP puts, one strike in the money, and I wasn't smart enough to sell them right out. But because the volatility picked up, even when the dollar recovered quite a bit the next day, I wasn't down money. And then now today, I'm back profitable as much as I was at the bottom of the crash again.
Yeah, excellent. Obviously, dollar index is definitely in play. Are you typically taking, what's your hold time typically, or at least on these trades?
Well, I bought April, and, you know, I mainly do, you know, options type strategies like what a lot of people in the community do, but I'm always looking for discretionary type trades like this. So I will typically, with long puts, I will set an amount of theta that I'm willing to lose. And that will typically be, if it's an April option, it might be a week, 10 days, maybe up to 2 weeks. But I did sell 25% of them today, of the puts.
Excellent.
So I have 75% of the position left.
All right, very good.
Jerry, Mike asked, what's the software you're using at the chart on the dollar? I think it's where you're...
Tom, what is the one he's using on the dollar? Oh, on the other chart. Probably this chart right here.
Yeah.
Yeah, this is from Daily FX, and you get the free charts, and it won't look like this when you first get it. You've got to configure this, and you can go ahead and email me or email Tom or Jim, and I can get you instructions on how to configure the chart like this. But Daily FX, this is the FX power charts, and it's pretty cool. We're getting some feedback. Is it Dave or Tom? You've got a...
I'll mute again. I was just going to say, to answer that question also, on TOS you can just use /DX, and it's actually a future that trades. And that's the one I'm basically using to monitor my UUP trade. So I just thought I'd throw that in.
Right.
/DX on TOS.
Right, exactly. And with Thinkorswim, I mean, yeah, you've got all of your quotes basically at no charge. The only problem I have is I can't draw and do my analysis as well. So you're not going to get the futures on the other well, no, I'm sorry. These are all futures on the daily FX. You won't get futures on TC2000. Those are more for equities and ETFs. So again, different tools for whatever you're trying to carve up, and they all have different edges. There's no such thing as only one screwdriver in your toolbox, let alone all the other power tools that you might have. So looks like MetaTrader. It is similar to MetaTrader, but MetaTrader is actually more programmable. It actually can get more complex. You know, what's funny about any of this stuff, I don't know if Optionetics is still around, and they had their Optionetics Platinum software platform. And I used to, because Fontenelle's, he did such a great job of marketing, him and Tom.
Gentile.
And yeah, Tom Gentile. And so typically people would buy the Optionetics package, and so they'd be stuck with Platinum. And I was fighting telling people to use OptionView because, in my opinion, it's just my opinion, the interface, I mean, just to go ahead and click, here's Sherwin-Williams, I've got a trade on, you know, just the interface where everything is all one click and you've got everything connected, what Len Yates has done from a programming perspective. If I can do something in 3 clicks instead of 6 clicks, it can make a huge difference. So,
Hey,
yeah.
Jerry, so what your take on the market is, we're market analysis. Look from a technical analysis point of view, if you're looking at SPX or any of the indices, what do you see? You know, to me the market looks a little weak, but it could rocket higher if it breaks that resistance.
Exactly. Okay, so since we talked last Monday the concept was that everybody was waiting to see if patience was going to be left in or taken out of the gibberish coming out of the Fed. So they took it out but left it in, and the market took off. Does that really have anything to do with the fact that Greece is in talks with Germany and everything else, let alone all of the other, from a global perspective, market perspective, the trend is intact to the upside. And the equity markets in the United States, in my opinion, for the time being, seems to be like the only safe place around. I see a lot of people trying to sell municipal bonds. I see a lot of people saying that we're in a bond bubble. It's hard to disagree with any of these arguments. The fact of the matter is, people are being charged, institutions are being charged money to park their cash in treasuries or central banks, so they have to put it somewhere. Where are they going to put it? They're going to put it in a ruble? They're going to put it in this new currency thing that Russia and China are putting together? It seems to me as if you got to hold your nose, and the equity markets just want to grind higher. BTFD. I mean, just look at these are the daily charts. Here's the NASDAQ on the bottom right, the dollar. This is the Dow 30 over here in the middle on the bottom, and the S&P 500. I mean, it's just bottom left to top right with no end in sight. If we take a look at the NASDAQ, we had this, it looked like a couple of times we had these drops down, but notice how fast, fast and swift the drop down is, and then it comes right back up. Then another pullback and right back up. We had another 3% pullback on the S&P and the NASDAQ a few weeks ago. Comes right back up. How do you fight that? I'm more of a contrarian. I've been playing with the markets since the mid-'80s. And I'm a big believer in these pullbacks. But now they come too fast.
Oh, Jerry, I was just going to comment, just from the other side of the pond, sort of over Tom's way, Brazil was up 7.6%, Spain 5.8, the RSX 5.9, and China FXI plus 4.5%. So there was definitely upside action in the foreign markets last week as well.
Absolutely. So how are you accessing those markets? If you could, I don't know if you've got a headset, but I can mute my. I'm not talking or.
Oh, you mean myself on that?
Yeah, we're getting huge feedback.
Okay.
Now it's better now. Yeah.
Is that me that's feeding back, or?
I make an assumption.
I was on mute when I'm not talking.
Yeah, no, that's what I've been doing. No, that's all I was pointing out was, you know, obviously you can just use the exchange traded funds, but I was just pointing out that, you know, EWZ, EWP, RSX, FXI were actually up more than the U.S. markets on a week-over-week basis last week.
Mm-hmm.
That's all I was pointing out.
Absolutely. Yeah. You got a beautiful FXI's got a beautiful W pattern, which is still trending higher over here. Steven's got a comment. Does anyone here really think the Fed can raise rates to normal levels? I see the specter of normalizing rates as a bluff. The U.S. debt and interest expense would explode. I'm in that camp as well. I think for every quarter point that they want to try and raise interest rates, how much are they going to have to pay back? The flip side to that argument could be that we've pushed so much cash into the European Central Bank and some of the other central banks that they're going to have to pay it back, but they got their own problems. Maybe that was the original agreement. The central banks work in their own world. But who else has an opinion as far as, you know, I was saying last week, we'll probably have a token 25%, 25 basis point raise sometime around June or September, as most people are saying. This guy Fisher looks like he's trying to be pushed to the front of the microphone, front of the podium. I think Janet Yellen looks like she's learning quickly, but I think this other guy's got a lot more experience dealing with the media and the press and how not to shock the market. They have to choose every word perfectly.
Well, I would respond to Stephen's comment that I think it's a very apropos comment, but that ultimately this is an unknowable. Yes, if they raise rates, it's going to cost the federal government more money because they have interest payments as well. But I really think it is unknowable how this whole thing will play out. You have to kind of respond to the market as it moves along and, you know, try to stay educated and don't listen to the media journalists, but, you know, read the headlines, read the actual factual data as it comes out. And it's ultimately, I think Stephen, it brings up a good point, but it's really ultimately unknowable. We just don't know how this will play out.
Any other comments as far as that goes? I mean, here, you know, you take a look on a monthly chart of the SPY, and yeah, the unknowable. I was saying, you know, about a month or two ago, that it looks to me as if when the Swiss Central Bank unpegged from the euro, you know, that was a potential Bear Stearns moment. And then notice shortly after that, oil started to collapse. And there's so many hedge funds, businesses, corporations that are going to have their margin calls those margin calls have to ripple through the market. And a lot of people are also hiding under their desk. They don't want to go ahead and tell their boss that there's a couple of $1 trillion of derivatives that they have to cough up. And so it can take about 6 months sometimes. But I think that we're starting to see the cracks. I mean, as Dave is saying, you got to trade what's in front of you. Absolutely. As a technician, I'm trying to project into the future where the support and resistance levels are. So, and then with options, it's the beautiful way to position yourself. Supposedly, Goldman Sachs and J.P. Morgan now, they are out on the fourth and fifth standard deviations now, because they know that at any given moment they could have a flash crash or a real crash, and they just don't want to get caught off guard.
So they're finally learning, is what you're saying.
Yeah, because they don't know what the guys in the other room downstairs are doing, or in the computers. And that's the scary part, these algos. Eventually, that was the original flash crash, 1987, when when people had their personal computers programmed for the first time on the market, and they just never understood what price discovery was about. And Stephen's saying, following the path of Japan. I don't know. Japan Japan had a zero tolerance for unemployment. They had 100%, and they're also almost a hermetically sealed civilization. They'll let you fly in and visit, take a tour of the Fukushima plant, but you're not really welcome to stay. So I'm not sure if Japan, and the United States can really be apples to apples comparison. But as far as following the charts and the debt bubble and everything else, that's, we may be stuck in the same similar type of a trap.
Yeah, Japan is, I think, kind of a unique fish. I mean, with that culture, I mean, where else would you have people that in World War II that if they failed in a battle, they did the honorable thing and committed harikari? I don't think you see that with the U.S. Armed Forces. And I think it's, like I said, kind of a different fish. It's a quite a different culture.
Well, then we got Tom over there. This begs anybody that puts on the U.S. uniform gets in harm's way. There's always somebody out there that's willing to jump on the grenade every once in a while, and
well, it wasn't reflecting on any U.S.
Of course,
people that. Just kind of quite a different culture there.
Mm-hmm. Right. Okay. So John is saying aging population, decreasing birth rate, extended stagnation, many similarities. There's a lot of things, are not being said about what's going on in the U.S. The immigration policy, you can argue it from a few different angles. There are some people that say that because the middle class had stopped, it used to be that there was 3.2 children per family. That slowed down a lot. And so we were importing our birth rate. But I think that was misguided. That was under the assumption they'd all have jobs at IBM and AT&T and General Motors to help prop up the tax base instead of taking the money out. It's the demographics is very important. I find it interesting. Like in Russia, they have procreation days, where everybody's supposed to stay home and do their part for the country, for the motherland. pun intended. So,
So, Jerry,
this,
you're still saying the uptrend's intact. How far do you think with Fib or whatever it might go for your experience?
you know, when we're looking at, let's say, the S&P, okay, because it is amazing that the average hedge fund and retail investor is now shifted into the ETFs, because how do you know whether Apple is going to collapse or not because of their iWatch? So why not just buy the Dow? So we've got a fib extension up here, the 178.6 at 230, 229.4. So we're trading at 210. So if you wanted to go ahead and maybe sell resistance up at about 230, that's probably a safe spot. 20 points, 20 S&P points on the ETF. Let's see. If we were looking at any, it's interesting because you have stocks like Netflix, which they just want to do their own thing, whether the market goes up or down. And so you have Priceline, Netflix, Chipotle, Mexican Grill, that you can go ahead and really capture some beautiful momentum. Notice these fib clusters that I've got right here at 417. I was right about Netflix back, as it looked like we're forming a head and shoulder pattern. You see this? Here's your left shoulder, here's the head, here's the right shoulder. And so again, these are not trade recommendations. I have no clue, as anybody does, exactly what's going to happen, but I do believe in chart patterns, and I do believe we have a very well-formed head and shoulder in progress. It could take a while to come down, but we've dropped down here to 418. We've got 393 is the next stop down, and we've got 341 all the way down here. And that's only the first step in the process, because once we do form that head and shoulder pattern, then we got to figure out, are we going to crash? Or are we going to drop all the way down the distance from, let's say, 500 to 3? That's 200. Could we crash down to 100, 150, as a true head and shoulder pattern might do it? You never know. A lot of people say Netflix really doesn't have the true revenue for what they're doing. Or if maybe they're playing around with their accounting. So there's a possibility with Netflix. One of the things that I always talk about, high probability chart patterns, such as a head and shoulder pattern, triangles, whatever it may be, it's coiled up price. And it could break to the downside, which is what most people would expect from a head and shoulder pattern, but it could just as well bounce off of the neckline and go right back up and form a double or a triple top. So there's one thing for you. How about Chipotle, Mexican Grill? These are your proxies for the market if you want to try and take advantage of individual issues versus the ETFs. And so just a beautiful trend channel intact. Notice connecting the highs to the highs. If I create a parallel line and then drag it down here, notice we've got almost, yeah, that's pretty good. It's pretty close for a pretty good trend channel right here. We're hitting the bottoms here, so if it looks like the market wants to take off, could we end up back at the top of the trend channel at 800? It might take a while, but that's about an extra 120 points. Nothing that 120 points for Chipotle is not out of the question. Look at these gaps. You had Chipotle down here at 592, and it gapped up the next day to 653. So 120 points up on Chipotle. You never know. Again, that's not a trade recommendation. Personally, it's like expensive beans and rice wrapped up in a tortilla. They charge, you can't get out of there for $10, right? And they don't own their real estate. They set up shop inside of a strip mall. So it's a beautiful business model.
Hey, Jerry, Chakri was asking, he said Russell's testing new highs every day. Do you have any opinion?
Yeah, good question. Okay, so I trade with the IWM on the Russell most of the time because when I'm training people, trading the big contract definitely has its benefits. So if you take a look at the Russell, you've got an inverse head and shoulder pattern as well as a more complex sideways pattern, which is now broken to the upside. And so one of the other things with this platform is, here's like the Russell 1000. Let's see if I go to my watch list. Okay, just real quick. I'm just going to sort here. These are the Russell 1000 components. And, real quick, there's your price line. But look at this. So, the bottom line answer to that is I think the Russell is probably going to lead the way up and down. And we've got what I consider to be a decent flag pattern here. So our resistance, let's say on price lines up here at like 1262, if it can break above there, you're looking at a nice 150 point move potentially on price line to the upside if it wants to break. Otherwise, it's in a trend channel. The primary direction of price line, the primary direction currently is down. So something to watch. So in other words, what do? I'm looking at the ETF and the index itself, which wants to go up, and then I want to start looking at, if it's a price weight, market cap weight, depending upon the index, I want to look at the individual components and see if I can go ahead and look at this Graham Holdings. Graham Holdings, I think that's the Washington Post, amongst other things. I guess they probably print school books. Consumer Defensive Education and Training Services. I don't know. Has anybody ever traded that? There's Chipotle. So that's something that I go ahead and I watch, the individual components that make up, help to make up the index, and of course Google. Ever since they split, and they split into Class A and B, it's just not the same, It's just, and so with such an expensive stock, I've had some of my best trades with Google, especially around earnings, volatility, and direction trades. So, it's always something to consider. It's, let's see, Jerry, do you use DMI? Yeah, I've got DMI. You can see this is a derivative of the ADX plus the plus minus DI on the bottom of all my charts here, at least on this platform. So, yeah, and Wilder's, was it G. Wells Wilder? Yeah. It's a definite fantastic indicator showing the strength of the trend. In this case, with Google, you can see that the strength has just gone sideways here on a daily chart. For example, if we look at the Russell with the ADX DI, you can see that the pressure is to the upside, positive, and the trend strength with the ADX is starting to move up. Also, all my other indicators here, stochastics, RSI, as well as my MACD, everything is positive on the Russell. All right. We got about 10 minutes left. Dave, I don't know, anything you want to see if you can push your screen or anything you want to talk about? I really, I'm preparing for a meeting. If any of you are in South Florida, I'm doing a live meeting in Delray Beach. So you can send me an email or send Jim or Tom an email if you want the location, Delray Beach Civic Center and Jog Road, or fly on in, say hello.
Well, that sounds good to me down in Florida. I'm having a little bit of trouble with the WebEx tonight, so I'm back on the Windows side, but I've got, so I don't think I should try to share screen again. I'm just having a little bit of issues. Next time I'll just log in on the Windows side and not mess with the Apple side. But I will say that I love Apple products, and I got addicted to the MacBook, and then I needed Windows for option view. I think that was the first thing. I can't remember, but I ended up using this Parallels. And so I basically have two computers built into a Mac, and I hope that no one's offended, but it's kind of a pain in the ass.
Yeah, I just have two different computers, so I keep my Windows and Mac separate, but they're next to each other. They're friends.
Yeah, that might be a better way to go. And I actually tried that, but then I was like, I wasn't getting my email. I was like, I wasn't crazy about the strictly PC computer. It was, I don't know. There's no easy answer. I think if I could go back in time, I would just stay with the PC, which is what I was using 10, 12 years ago. But it is what it is. I do like the MacBook, but it's kind of a pain.
Hey, Jerry, just a quick question. If you take a look at the euro, it had a nice bounce off that Fed announcement. Any opinions on how high this bounce might go?
Okay, so here on the euro on a daily chart, just you can see the carnage, and man, this WebEx it's blocking my, okay, here we go. So the bottom line here is we've got a nice trend channel connecting the top to the top there, and let's see if we've got, yeah, look at the, that's relatively good. So it looks like we're coming up on resistance. We've had a nice bounce. You know, the fear was that the euro is going to break apart, Greece is going to leave, and after Greece leaves, Italy and Spain would follow, and everything would fall apart for the euro. And then there's other people that say that it's just been a washout. Let's take a look and see what the fibs say here. If I go from this low here all the way back from July of 2012 to the peak over here in the middle, when it comes to fibs, there's subjective. Here we go. Take a look at that. Okay, from September 16th, 2012 to this low here. Whoops, I didn't want to do that. You can see that we pretty much, oh, hold on, I got to pull that right up to the top of that line there. Isn't that amazing how from this low here to this high here, how that 238.2 extension called the bottom? And so that's what I'm looking for when it comes to Fibonacci's. I'm looking for the harmonics that are built into the chart to call the highs and the lows. And so our next resistance level then, let's go ahead and bring up, that would be about 111.62, 111.60 call it. We've got the 178.6 for overhead resistance right up here. Notice how prices came down and bounced off that area, went back up, consolidated over there, and it's trying to get back up there. We've obviously got our low put in over here, and we've got the 200% extension right here at current price. So that's some quick and dirty support and resistance levels right there. I would say for the time being, we've probably put in a temporary low, but most people have been calling for parity, and time will tell. Time will tell. Typically what will happen is as soon as everybody starts saying we're going down to parity, that's usually the time you'll get the bounce. And yeah, nothing goes down in a straight line forever.
Yeah, I heard Morgan Stanley was predicting 80 cents by the end of 2017.
80 cents. I mean, that would be, that would be amazing, but, that would be so structural, because think about all of the businesses and think about what that means. I mean, it took, if we were to go out and look at on a monthly basis, you look at the euro. Okay, so when it first came out in 99 or whatever, well, they actually formulated it. They put all the currencies together to get some type of a derivative euro. But it technically came out in 99. It was down here at about 83. Beautiful triangle pattern at the bottom. But it took a while. I mean, it's June of 2008 to put in the high. It was on a tear but it first had to zig and zag its way out of this triangle. And then August 2002, it hit parity. It bounced around parity for a little while. And then it was off to the races, up to 120 and back down to 107, and then up to 128, back down to 118, then back up to 136, and then all the way back down to 116, and then from 116 all the way up to 160.
That was an expensive mortgage payment.
Yeah. And that was the top of the 2007 market. Right around this time, I was on the floor of the New York Stock Exchange June. No, was it June? No, it was July 27th, 2007. And that was pretty much and I was there inside the boardroom. It was a Teach the Teacher event at the New York Stock Exchange. I was surrounded by K through college instructors, and John Thane was explaining to these people about how they were going to the hybrid model, where the specialists were going to be kind of merged with the computers, and NYX was going to be the New York Stock Exchange symbol, and that they were going towards volume-based business instead of being the public entity that they were supposed to help provide true price discovery for corporations. And so that was really the huge changes that took place. 2007. It's nothing but.
Was that around when they listed the NYX?
Exactly. He was actually breaking all that news at one time. And I used to work at IBM, and as a programmer, he was explaining that they were going to be these new electronic orders that would sweep the book. And I was just amazed. I'm sitting there listening to all this, and I mean, in a way, it was a gift. It was like he was saying that all of this high-frequency trading was now going to be incorporated into the New York Stock Exchange. And silly me, I didn't jump on the Flash Boys Express.
Right.
Yeah. But, so the euro, I mean, if you even take a look at this, look at this inverse head and shoulder pattern. These patterns show up all the time. You got your triangle down here. You've got a shoulder, head, shoulder. Once you broke above here, it didn't necessarily go all the way up, but it sure made a nice run. There's a pound. Is it the pound yen? Let me see on the pound yen. on a weekly or a monthly chart. Yeah, here we go. At also 2007 at the top of the market. Let me bring this to a weekly chart. You have the most beautiful textbook head and shoulder pattern on the pound yen right here. Beautiful shoulder, head, shoulder. I couldn't believe at the time, because I was pointing this out when I was teaching, I was heavily involved in the currencies and doing my broadcasts and blog on FX Street. And I was pointing this head and shoulder pattern out. And I said, man, there's no way that it's going to go down that low. But you take a look at these fib retracements and extensions from this low to this high. And I mean, just look at how that called support and resistance levels, you know, all the way down. It's just a beautiful example as to how these patterns can work out. I remember calling the dollar CAD back also around the same time. Let me close this. Dollar CAD. Also around summer of 2007 when I was traveling, I'd put on a trade and I was saying that we were going to hit parity. And so you can see parity is right about here. There's my 1.0. And it's hard to see, but right inside of here, is that it? September 2007. Right inside here, it went ahead and it was a beautiful run down from like 117 right down into here. Anyway, we've gone over, it's 5:33, just, you know, chart patterns, trend channels, Fibonacci's. This is part of what I'm going to be showing. I'm putting, this is my PowerPoint. Who are you and why are you here? But, you know, this is really, as far as technical analysis goes, Fibonacci retracements and extensions, high probability chart patterns, support and resistance levels, trend lines, moving averages, and indicators. And then you've got to put your strategies on top of it, whether you're day trading the futures or position trading with options, having your step-by-step methodologies. You got to understand the tools you're using, the software you're using. So one of the biggest things that I don't see much training is how to actually enter your orders. I would probably bet $1 that everybody in this room has slipped and entered a wrong order once or twice. That has cost us quite a bit. And using our software, calculating our risk reward and position size, programs like OptionView help me analyze side by side equal trades, equal excursions. And then once you understand all of that, once you have all of the mechanics down with all of that, then it's a matter of patience, practice, psychology, and planning. And even then, it's only a high probability of success.
Absolutely. So,
And
thanks. We really appreciate it. I keep people too long. So I hope you'll be back next week. And I think Jim can join us. I think he's busy this week on a business trip. But Dave, thanks for joining us and adding your 2 cents to the conversation. It was great. Really appreciate it.
No problem. And I'll just say those last couple examples will show you that don't ever doubt how far these prices can move.
exactly.
All right, everyone.
Exactly.
For coming, and we will see you next week.
All right.
Good night,
Thanks, guys. Yep. Good trading. Bye-bye.